Welcome back to the Neuro Finance Masterclass. Today's theme is asset allocation and true diversification. This is day 79 of our 365 Days to Financial Freedom series, and we are talking about something absolutely foundational today.
Absolutely. Over the past few sessions, we've been looking at the individual pieces of the puzzle. But today we are officially stepping up. We're moving away from being amateur stock pickers and diving into professional-grade wealth management. It's time to zoom out and see the entire battlefield.
So, here is the battle plan for today's explainer. We're going to uncover the fund manager's secret, break down the asset class arena, discuss the all-weather philosophy, figure out your specific strategy, and finally, we'll hand you the architect's blueprint. Let's get right into it.
Starting off with Section 1, the fund manager's secret.
So, over the last few weeks, you've really mastered the individual tools, right? ETFs, crypto baskets, bonds, gold. But how do they actually fit together? Well, academic studies show something pretty wild. Over 90% of a portfolio's long-term returns are driven by one single factor. And spoiler alert, it's not your stock picking ability. And no, it's not timing the market either. It is asset allocation.
Seriously, let that sink in for a second. The vast majority of your financial success isn't about finding some hidden gem of a stock before anyone else. It's entirely about how you divide your capital army across the financial battlefield.
Right, and it all comes back to that classic rule we've all heard a million times: don't put all your eggs in one basket. It sounds almost like a cliche at this point, but the real-world application of this is deeply, deeply strategic.
Exactly. True diversification means realizing that every single dollar you own is a soldier in your army. Think about it. You wouldn't send all your troops to guard just one hill, leaving the rest of your entire fortress completely exposed. You have to divide your forces strategically to ensure total wealth protection and, of course, sustained growth.
Which brings us to Section 2, the asset class arena.
So what exactly are we talking about here? Asset allocation is a strategic decision of what percentage of your total wealth belongs in each asset class. I really want to emphasize that word strategic. Because an amateur, they just buy assets whenever they feel like it, usually based on raw emotion or whatever the news headlines are screaming that day.
Right, but an architect does things differently. An architect doesn't just buy assets. They manage the specific weights of those assets to survive any market condition and maintain the structural integrity of their entire portfolio.
Let's break down the actual assets we have available. They generally fall into four main categories. First up, equities, so things like stocks and ETFs. Think of this as your engine. It's your long-term growth vehicle designed to outpace inflation. Second, we've got cryptocurrency. This is your hypergrowth engine. Obviously, it carries higher risk, but it also has massive potential upside. Third is fixed income, which includes your bonds and cash. This is essentially your safety net. It's your dry powder just sitting there ready to be deployed during market crashes. And finally, the fourth category, hard assets, like gold and commodities. This is your shield. It offers vital protection against inflation and geopolitical chaos. Now, an amateur puts 100% of their money into just one of these rows. But a true architect builds a diversified fortress, utilizing all four.
All right, moving into Section 3, the all-weather philosophy. We know what the assets are, but why is it absolutely crucial to spread our money across them? It all comes down to economic weather. Just like the physical world around us, the economy has seasons, and different assets thrive in different climates. So, when the economy is booming, you are going to see your stocks and crypto absolutely skyrocket, while your gold might just kind of rest and trade sideways.
Right, but what happens when a crisis hits? When the VIX, the volatility index, explodes, the weather changes violently. Suddenly, stocks are crashing. But guess what? Your gold and bonds rise up to protect your net worth. By holding uncorrelated assets, meaning assets that don't just blindly follow each other off a cliff, your portfolio actually becomes an indestructible all-weather fortress.
And the entire goal here is to avoid this absolutely terrifying number, 80%. Because if you dump 100% of your capital into one single asset class, you are leaving yourself completely exposed to devastating 80% drawdowns when that economic weather suddenly turns on you. And trust me, a loss like that, it completely destroys an investor's neurofitness. It ruins your psychology, it makes you panic sell at the absolute bottom, and it basically takes you out of the game entirely. True diversification is how you protect your mind, just as much as you protect your money.
That takes us to Section 4, finding your strategy.
Now that we understand the tools and we understand the economic weather, how do we actually build this fortress? Well, the truth is, there's literally no one-size-fits-all allocation. Your specific strategy depends entirely on three things: your age, your financial goals, and your mental toughness. Let's look at an example. Take an aggressive portfolio, 60% allocated to stocks, 20% to crypto, 10% in gold, and 10% in cash. This setup is designed for a younger investor or maybe someone with an incredibly high level of mental toughness who can genuinely stomach the wild volatility that comes with hypergrowth. Notice it's heavily reliant on those growth engines and much lighter on the shields.
Now contrast that with a conservative portfolio. This one holds 50% in stocks, a heavy 30% in bonds, 15% in gold, and just 5% in crypto. This gives you significantly more day-to-day stability. But listen closely to this point because it's vital. The actual math, the specific percentages you pick, doesn't matter nearly as much as your discipline to actually stick to those numbers over time. When the market panics, an architect doesn't abandon the strategy. They just systematically rebalance back to their target weights.
And finally, Section 5, the Architect's Blueprint. All right, this is where the theory ends and the practice begins. It is time for you to shift your mindset today. You are no longer just casually buying assets. You are now a master architect managing the structural weights of a financial empire.
So we have a direct cognitive task for you right now. Grab a piece of paper and literally draw out a pie chart of your current net worth. I want you to look at it and answer this honestly. What percentage of your wealth is currently sitting in cash, crypto, stocks, or gold? Is it balanced, or are you heavily exposed to a single failure point? Identify where your fortress is weak today and actively decide on your new target asset allocation.
We're going to leave you with this final provocative thought. Stop treating your investments like a random collection of lottery tickets. Start running your wealth like a sovereign global fund.
Exactly. Every dollar has a purpose, every asset has a designated weight, and every move is calculated to survive any market condition.
So are you ready to step up and build a portfolio that can withstand any storm?
Go make your blueprint today. We'll see you in the next masterclass.